As far as the market, looks like we're getting a little bit beat up here. I know we drifted a little bit higher here in the pre-market, but we've really kind of come in. I want to ask you about what you think about the market, just to kind of set the table here. I want to ask you about what you think about the market, what you think about that Nvidia news that we got this morning, if you've digested it yet.
I think that it's not surprising me it's come back in a little bit. The market's rallied. Obviously seen a nice bounce here. We got the big number coming out on Wednesday. We also have some numbers out of the retailers this week and guidance out of the retailers, and there's some more cracks starting to show up in the consumer. So people are going to say, hey, are we going to get some confirmation that these cracks are really starting to grow? But the big thing is going to be the CPI number on Wednesday. We might not like the fact that one number has a big impact on the market, but it does. I mean, we have to be reality. And the fact the market has been bouncing into this number wouldn't surprise me if we pull back just a little bit, as the people get a little bit nervous in front of that number after these big gains and take a few chips off the table.
Yeah, and I mean, it looks like we're kind of running up to the all-time highs here. I'm still in I'm still in the bearish camp, I guess you could say. I'm waiting to see if that breaks before I change anything. I think we might put in another top right around those highs and move back down.
Well, and that will be very, very important, because if we do blow through this is a critical week. I mean, you say every week's a critical week. Well, if we break above those highs, it is, I mean, in a meaningful way, not just a little way, a meaningful way, it's going to run. Okay. But if it doesn't, like you say, another top here, that's a double top. Double top. What happened in 2000? What happened in 2007?
Yep. Double
top. You do not want to see double tops. So I'm definitely leaning towards your side of the equation. That this is, even though I don't know what's going to happen the next 2 days, kind of quiet, but we could have some real a lot of action later this week.
Yeah, and just to be clear about that level that we're talking about, one of the things that I look at to consider that level broken is multiple closes above that level. If the SPY trades above that intraday and comes right back in, to me, that's not it yet.
Exactly.
I want to see multiple closes above that level before that invalidates. All right, 13, you had something that you wanted to ask regarding China.
Yeah, so Matt, there's going to be, starting this week, they're going to have 138 billion in bonds they're trying to sell, and I believe that extends all the way through most of the rest of the year until November. I was curious if you had any take on that. How do you think this is going to impact financial markets globally?
Well, I mean, supply is becoming obviously a very, very, very important issue. I mean, it's kind of weird because on the one hand, the supply is so big here in the U.S. that they're like, well, we've got to keep rates low because we can't afford for them to go up because it'll cost us too much money to keep issuing all that debt at high levels. China has that same issue. The other thing, I guess, they can, obviously manipulate their markets in a big way, but there's only so much way we can do it. They can do it. They still have to rely on the global marketplace and what global investors are going to do. And so this supply, I think, is going to create problems here for the stock, for their markets overall, and for the global marketplace. And I guess I would say point out too is that there's a lot of reasons. A lot of people are really bullish on the China stock market, but if you look at the FXI, the big cap ETF in China, that thing's getting a very, very overbought on its RSI chart, coming back a little bit now. I think it's so on a technical level, I'm concerned about that market. And then with this new supply coming to the marketplace in the fixed income area, that's going to create some more headwinds as well. So it's definitely something that I'm worried about. And I think people have too much confidence in that China can just manipulate their markets any way they want to. The markets are still bigger than any government, even or any central bank.
And my concern with this is that, well, they haven't been able to get the solar batteries or EVs, the heavily subsidized industries that they're trying to export to different parts of the world. That hasn't worked out. So they're trying to raise more money to subsidize their next endeavor, which is going to be chips. And I think that's one of the reasons why we're seeing them stop buying Nvidia. They kind of want to take the reins themselves, and they want to start flooding cheap Chinese chips into the market. And I think that's one of the reasons why they're raising money, is to help subsidize that. That's just my speculation. I don't know if it's something you would think too. And
they still need money because of these real estate companies.
Yeah.
I mean, last week they were out there saying there's no way we're going to make we're going to make people whole. Look to the government. Where's the government going to get that money? So it's another issue. But you make a very, very, very good point. And Nvidia, last May, Nvidia reported great numbers and great guidance. It's all going to be about guidance. But they also reported some real good numbers in August, and that didn't go so well for the stock. If this issue has a negative impact on Nvidia and on the chip sector, there's no more important leadership group than the chip stocks. That was the case for several decades, and obviously even more so in the last year or so.
So we could be seeing probably a little bit of shakiness in the semis market going forward here, especially with Nvidia coming up, their earnings coming up next week.
Exactly, and we have this situation where the technology stocks are so. I mean, people can sit there and say, "Oh, well, don't worry, they'll rotate out of the tech stocks and into other areas of the market," and that does work if the tech stocks are just kind of going down a little bit. But they're still way overweighted, and if they start getting hit hard, they're 57% of the Nasdaq 100 and 30%. Forget about the Mag 7, all the tech stocks. 57% of the Nasdaq 100, 30% of the S&P 500. If they start going down, the whole market starts going down. And if the whole market starts going down, people forget about rotation and they sell and go into cash, especially with cash paying 5%. So this whole thing that you're talking about could have a big impact on the overall stock market at a time where like what Ryan talked about, could be forming a double top. So investors need to stay incredibly nimble right here and be very, very careful.
Yeah, thank you for that.
Yeah, really, really good stuff, Matt. So Nvidia, this is trading lower here. It's doing its best to try and recapture 900. One of the other stocks that I took a look at here was TSM. TSM is just down about 1% here today. So Nvidia looks to be taking a little bit more on the chin. Matt, any parting words of wisdom for the rest of this week?
Well, I just the one thing. Well, again, stay nimble. If you're into the options market, look at strangles. Because it could go either way, and so you could look at especially some index on the indexes. But the other thing to mention, of course, is this whole thing with natural gas. I mean, everybody's saying, "What's the next AI play?" Well, we all know about the what's going on with the utility stocks. The XLU is very, very overbought. Be careful about that. But the natural gas stocks are not. Okay, and natural gas, the commodity, is starting to break out. It's gotten clobbered for a while, built a nice base for the last 2 months, now starting to break out to the upside. So stocks like Cheniere and Chesapeake, the old Apache, which is now APA Corp, some of these names that have a lot of exposure to natural gas should do very well. And I don't know if they're going to skyrocket like some of the utilities have. But it's more than just an AI play, and it's very, very oversold. So take a good look at that, because there's going to be a lot of volatility in the marketplace. This is one group that could really surprise people to the upside.